Hey, it's Isma once again from FX Kampala, and in today's video, we're going to be looking at Elliott Wave. So I believe a couple of you actually out there have been asking, what is Elliott? How do you trade with Elliott? Where does Elliott comes from? So in today's video, we're going to be looking at Elliott Wave. In other words, the Elliott Wave Theory. So what's its structure? Who is Elliott in particular? How does it come out to be? How can I trade with Elliott? How do you get a clear setup with Elliott? So every question about Elliott Wave is going to be answered in this video. So make sure you watch it till the end. And I believe by the end of this video, all of you will be in position to have understood what Elliott Wave is, how can you trade with Elliott, understanding, having a clear description, and understanding, an extensive understanding of an Elliott Wave theory. So in this video, we're going to do a practical live session onto our currency pair that we're going to be using, that is the GBP Canadian dollar, using the Elliott Wave theory, and how we can actually do this applicable with our Elliott Wave theory. So make sure you follow each and every step. You're actually allowed to pause as you repeat and be in position to understand this, probably to the lowest root of the Elliott Wave theory. So my name is Sewankambo Isma. I do welcome you back to our YouTube channel. Thank you for liking, subscribing, not only to our YouTube channel, but also on our various social media platforms. So please, if you haven't subscribed, please do, such that you do not miss out on each and every video that we do release on this channel, and also on our various social media platform, that is Instagram, FX Kampala, TikTok, FX Kampala, Facebook, FX Kampala, WhatsApp, FX Kampala, and all other social media platforms. So without any wastage of time, let's get directly into the reason as to why I created this video. So like I've told you, we're going to be looking at Elliott. So an introduction to Elliott Wave theory. An American accountant by the name of Ralph Nelson developed the famous Elliott Wave theory, which he published in his book, The Wave Principle, in 1938. Okay. Elliott analyzed the stock market covering 75 years of data and noticed a close correlation between the investor psychology and price movements. He realized that when the crowds of investors reacted to an external factor, they ended up investing in a certain way. This resulted in a repetitive patterns which created market movements that look like waves. Therefore, the premise of Elliott Wave theory revolved around his corrective human psychology, where the predominant sentiment of masses caused the trending markets to move in what he called a 5-3 wave patterns in any time frame. The first wave phase constituted the main trend, while the second 3-wave phase was a counter trend. So by these statements, we're saying that Elliott, the developer of this famous theory, is called Elliott. He's an American accountant that becomes famous, of course, for developing, or for have developed, the Elliott Wave theory, which actually published in his book around 1938. So he realized that after covering a lot of data for the stock market of about 75 years, he realized that as probably prices are moving, they tend to move in a 5-3 wave patterns. In other words, as the prices are moving, they form a 5-wave structure to a 3-wave structure, which we're going to see, or with what is basically referred to as the Elliott Wave theory, just as we're going to see in this video. According to the Elliott Wave theory, the market moves in a repetitive sequence of up swings and down swings. A trending market is made up of a motive phase, made up of 5 waves, and the corrective phase made up of 3 waves. If the market was in an uptrend, the Elliott Wave would look like basically that. So like I've told you, so as actually prices are moving, he said that having looked at the data of 75 years of the stock market, he realized that as people are investing, or as people are investing or trading, they form a 5-3 wave pattern. He calls this a motive phase, and this is a corrective phase. Okay, so a motive phase is made up of wave 1, like you can see, wave 2, wave 3, wave 4, and lastly wave 5. So a corrective one forms 3 waves, that is A, B, and C, as we can clearly see this. Okay, so and it says this is how the formation of Elliott wave looks like to be in an up or in this common ways, in the proper way. So we're going to see it. That's if in the form, this is if it's in the formation of the proper way. And then when it comes to the opposite way or in a downward formation, we also get to have the same thing. So 5 to 3 wave pattern formation. So you will actually be asking me here, how do I benefit as a forex trader? Why do I need to know this? Now, with such a formation, you can easily notice and realize what the next move can be. Like, for instance, if you have wave 1, wave 2, wave 3 forming, then you can literally know that I'm probably going to buy here as it approximates to wave 4. And at the end of wave 4, you can probably look at selling wave 5, then A, B, C, like that. So you as a trader, it's important for you to identify this wave theory, this wave structure, and see how you can probably trade with it. So we again say that this can as well be formed in all various time frames, not only in a smaller time frame, just as with the other technique, other theories just we have been seeing. For this Elliott in particular, we are seeing it happening in various time frames. In other words, you can have the 5 wave to 3 pattern formations not only in one time frame. So this can happily be in the bigger time frame, relative time frame, and the smaller time frame. These patterns can be found in any time frame and in small and smaller degrees. This means that each larger wave is made up of a smaller sub wave. For example, wave 1 of wave 5, wave of a 5 wave sequence can itself be broken down into 5 waves. So then after looking at that, of course, it's very important to have followed, or for us to follow the principles of the formation of the wave structure, or the Elliott wave structure. So it's not just a matter of you coming to the chart, having the wave 1, wave 2, wave 3. So there should be principles for you to have followed when you're coming up with an Elliott wave. Among the principles that we should look at are these that we should pay attention to. So as you're coming up with an Elliott, if you certainly think of any formation onto the chart that you probably think may be a perfect setup for Elliott wave, then you must have followed these rules, these guidelines, as we're going to see. So certainly observations can be made in Elliott wave theory, which give us some tips when trying to analyze the market using this model. In the motive phase, 3 basic rules must be observed. So as you have to consider, you have to first observe these principles as you're coming up with your own Elliott wave formation setup that you probably have seen onto the chart. So let's look and see what the first condition guideline should be. Wave 3. So what is wave 3? Most of you might be asking me. So let me draw a simple stuff here such that we can probably follow when we are drafting. So we have this. Okay. So if we're having something like this, so we have 1, 2, 3, 4, 5. Then we have the corrective phase. So this is 1, this is 2, this is 3, this is 4, this is 5. A, B, and C. So what are we saying here? We are saying that wave 3 should never be the shortest wave of the 3 impulse waves, 1, 2, 3, and 5. Wave 4 must, so basically this means that, you see, this is our wave 3. In other words, among of course, we have the impulse waves and the corrective waves among the 5 wave formation. So when you look at wave 1, wave 3, and wave 5, they are actually impulse waves. Okay, they are impulse waves. They are waves that move in the direction of the market, and those that move against the trend are called the corrective phase. So for this first formative wave phase, we actually have 2 and 4 as the corrective waves. So when it comes to the motive phase, we are saying that amongst 1, 3, and 5 of the impulse waves that make up the first motive phase, then the wave 3 should be the longest wave of this particular point. Then secondly, wave 4 never enters the price parameters of wave 1. So as you're drafting this, we said wave 3 should be the longest. The next that you should know is that wave 4 should never enter parameters of wave 1. So as you're drafting your wave 4, you have to make sure that it never touches parameters of wave 1, just as you can see. So these are parameters of wave 1, that is the highest point, and then this is the lowest point. Okay, you see, this is the highest point of wave 4, this is the lowest point of wave 4 still. So as you can clearly see, wave 4 never touched in any parameters of probably wave 1. Okay, then still, as you're drawing, as you're identifying your setup, as you're coming up with your setup of Elliott wave, you should again make sure that wave 2 never retraces beyond the start of wave 1. So what do we mean? In other words, this wave 2 should never go beyond the start or even at the start of wave 1. Okay, so this is wave 1, this is wave 2. So like you can see clearly here, if I can probably show you something here, here, this is the lowest of wave 2, the last part of wave 2. So as we said, it shouldn't go beyond the start of wave 1, because we can now clearly see the beginning point of wave 1, wave 2. Okay, this is the beginning point, this is the last point. Then of course, and then lastly, something that I made an observation on, it should be a common observation of wave 2 and wave 4 is that they move alternatively. They make alternative patterns. For example, if wave 2 makes a sharp move, then wave 4 will make a mild move, and vice versa. Like for instance, we have our wave, of course, wave 2 and wave 4. They are all, like I've told you, impulse waves that make up the motive phase. So we are saying that if one, of course, if one is sharp, then the other is going to be mild. Okay, what do we mean? That if this one tends to forms faster, then the other one will take long to its formation or for it to form. Okay, so if of course the wave 2 is took long to form, then of course wave 4 will of course be sharp. In other words, it will form with sharp formation. So by having this in place, then it definitely means that if all these are considered, then we're looking at this setup to be a clear setup for an Elliott wave formation. Having put these conditions, these guidelines into consideration, so let's go directly without any wastage of time on our chart, which is basically going to be GBP Canadian dollar on the 1 hour time frame, and we basically see how we do replicate, how we do apply the principles, the Elliott wave principles. I believe by now you have a clear insight of what basically happens. Now, as you're drafting with this, before we can clearly go onto our chart to see, it's always important that you actually use TradingView. We have an indicator called the Elliott Wave Theory. That is if you can't clearly identify a clear wave formation. So the TradingView indicator can as well help you easily to come up with this formation that of course works as the beginning point for you to ideally look or put in all these 3 conditions, guidelines into consideration before you can finally say that this is the best and the perfect setup for us to use. So let's get directly onto our chart and see how we can do this. See you there. So as we meet onto our chart, like I've promised, it's going to be GBP Canadian dollar, just like the way you can see, we can see it. We have it already. We have our wave 1, our wave 2, our wave 3, our wave 4, and our wave 5. So we probably think that at some point here, it's going to be the end of wave 5, and therefore we're looking at shorting at this point. That's why you can ideally see we have the end of wave 5. So the moment it approximates or it confirms that it's wave 5, then we're looking at shorting here to form wave A, that is for the corrective phase, A, B, then C. So we're actually literally looking at probably something like this. Let me get a pen and show you. So you're probably expecting to get something of this nature. That is wave A, then B, and then wave C. However, we have our wave 1, wave 2, wave 3, wave 4, and wave 5. So these are clearly forms what we call an Elliott wave theory. So by that, regardless of where you find it, you have to make sure that you at least have seen any of these points, and by you doing so, it will definitely be helping you to identify the clear points on when you can probably buy, when you can probably sell. So it's very easy. Don't make it the easiest way. Don't make it the hardest way. So just first go on to the trading view, identify this indicator, use this particular indicator to draft the Elliott wave theory onto your MT4, and then you will be in position to identify the next, because it actually projects to you the would-be next move or waves that are going to happen. Like for this case, we're looking at selling or shorting the GBP Canadian dollar because of what Elliott says. Because we see we have wave 1, wave 2, wave 3, wave 4, wave 5, which is the first motive phase. Then lastly, the corrective phase, which hasn't yet formed. However, this doesn't only apply for only the corrective phase, but then we can also look at it. Let's say if we probably had the formation of wave 4, and then we can probably also take an advantage to make the next move of wave 5. So we not only look at the corrective part, but any part provided you have wave 1, wave 2, wave 3. So you can look forward taking an advantage of the formation of wave 4, wave 5, A, B, C, and that. So thank you so much. Hope you found this video helpful. It is very easy, and I believe the questions about the Elliott wave theory have been answered, and I believe by the end of this video, by now you're at least well familiar and you can apply the Elliott wave principle in your trading theory as you are trading. So if in case of anything you want to learn how to trade, I provided a contact in the beginning of this video, and also any inquiry, anything to do with trading and all that, use the contact. We shall be in position to help you here and there. I do sign out. Bye-bye.